What's up, millennials? Today we're going to see what a fair price per share would be for a company called Markforged. This is a 3D company that is going to be acquired by the SPAC that's currently trading under the ticker symbol AONE. Now, if at any moment in this video you're like, what the hell is this guy talking about? Please check out my SPAC guide. It's going to be in the description somewhere. Also, if you need the Excel sheet I'm going to be using today, you can join our Discord for free. You can just go to nesami.com/discord. You can leave your name, leave your email address, and you're going to get access to it. And of course, as always, don't trust me, verify me. Always check what I'm doing because I'm just documenting my journey here. I could be completely wrong. So as I've said in the beginning, Markforged is a 3D printing company. They of course are working in a very large and a growing total addressable market. They already have revenue, so that is already good to see for a SPAC like this. They had $70 million in revenue in 2020, and this was revenue also to blue chip customers, so that is pretty interesting as well. They are projected to grow at 10x in the next couple of years, next 5 years more or less, and they already have pretty nice gross margins of 55+ in 2020. Also, an interesting fact is that ARK Invest has been accumulating shares of AONE of this SPAC, so that is good to keep in mind as well. And with regards to the merger date, we don't have a date just yet, but it is expected to close somewhere in Q2 or maybe even Q3 of this year. And then if we take a look at the pro forma valuation, we can see that as always they're trading, or they started trading at $10 per share. They're going to have 206.2 million shares outstanding after the merger, more or less. So if you multiply those two numbers, you're going to arrive at a pro forma market cap of a little bit more than $2 billion. And then you can also see in the investor presentation, they're going to have $399 million in cash on their balance sheet after the merger. So then you can take that pro forma market cap of $2.062 billion, subtract the amount of net cash, and then you're going to arrive at an enterprise value of $1.663 billion. Thing is, however, if you go into TradingView, you can see that the current price is $12.15. So if we go a little bit to the right, that's the number you can plug in over here in your Excel sheet. And then you can see that the current pro forma market cap is 2.5 billion. And of course, subtracting the amount of net cash, the pro forma enterprise value is 2.1 billion. So based on a price per share of $12.15, Markforged, the company, currently is worth $2.1 billion. But we of course want to know what a fair enterprise value is to later arrive at a fair price per share. So let's do that, and we're going to use a very simple formula of taking the revenue of a certain year and multiplying a certain range of multiples to that revenue. Let's first take a look at that revenue, because today we're going to be taking a look at the revenue, expected revenue of course, of 2022. In the investor presentation, we can see the historical performance of Markforged. So we can see that in the last couple of years, they have been growing at a compound annual growth rate of 70%, which is of course awesome. In the last couple of years, we did see a light slowdown of these numbers, but they do expect to grow at 68% over the next 5 years, more or less, to go from $88 million in revenue in 2021 to $706 million in 2025. Again, as I said earlier, we are going to be taking a look at 2022. So as we can see in the investor presentation, if we maybe zoom in a little bit because it might be a low or a very small number to see, we can see that they expect to have $122 million in revenue in 2022. An easy number to remember, and that is also the number you can plug in over here in your Excel sheet right next to EBITDA and revenue, $122 million. So the other thing we need to know now is a fair multiple. And for that fair multiple, we are going to be taking a look at the multiple of Markforged, which currently, according to the investor presentation, based on a price per share of $10 per share, is 13.6x. And then we can compare that revenue multiple to the revenue multiples in 2022 of the other companies that are right now in the investor presentation. And mainly we are going to take a look at Desktop Metal, which probably is the company that is most similar to this company, Markforged. So if you look at that multiple of Desktop Metal, we can see that that multiple is 29.7x, which of course is quite a bit higher compared to the 13.6x multiple of Markforged. And in the investor presentation, Markforged wants to make the case that they are very comparable, or sometimes even better compared to Desktop Metal. If you, for example, look at the revenue, Desktop Metal's revenue in 2020 was 15 to 20 million, more or less. Markforged had a revenue of 70 million, which of course is a large increase. And also if you look at the gross margins, which was negative for Desktop Metal, well, it was a very positive for Markforged as well. So that is quite interesting to know. So maybe if you actually do go back to that range of multiples, if you go back to these multiples, we can see that 29.7x for Desktop Metal, it might sound very high, but maybe it's not even that high. So what I've done is I've come up with a range of multiples. Instead of just one multiple using a range of multiples, I've come up with a range of multiples from 25x on the low end, so the low multiple, and the high multiple of 30x to be very close to that revenue multiple of 29.7x from Desktop Metal. So if you plug in all of those numbers, the Excel sheet is going to basically calculate everything for you. What it's going to do is the following. It's going to go and take that revenue of 2022 of $122 million, and it's going to first of all multiply that by the low multiple of 25x to arrive at this enterprise value of a little bit more than $3 billion. And it's going to do exactly the same thing with the high multiple of 30 to arrive at a high enterprise value of $3.7 billion, more or less. And if we go up a little bit, we can also see that the calculation of the midpoint valuation gives you a midpoint enterprise valuation of a little bit more than $3.3 billion, which is basically the average between the low and the high valuation. But that, of course, is the enterprise value. We want to know the fair price per share. So what you do is the following. You can take these enterprise valuations and you can add back the amount of net cash to arrive at a fair market cap, because in the beginning of this video we said that the difference between the enterprise value and the market cap is the amount of cash they are going to have on their balance sheet, and we said that was going to be $399 million. So if you do that, if you take those enterprise valuations, add back the amount of net cash, you're going to arrive at these fair prices per share, or fair market caps rather. For the low end, you would arrive at 3.4 billion, for the midpoint valuation 3.7 billion, for the high valuation 4 billion, more or less. And then you can also go one step further and you can calculate a fair price per share by taking those fair market caps, dividing them by the amount of outstanding shares after the merger, 206.2 million. And then you're going to arrive at these fair prices per share. So for the low valuation, it's $16.73. For the midpoint valuation, $18.21. And for the high valuation, $19.68. So according to these calculations, Markforged is actually undervalued right now. Of course, keep in mind, don't trust me, verify me. Always check what I'm doing, check if everything is all right. And also keep in mind, we haven't taken a look at assumptions. We've taken a look at a predicted revenue of in the future, in 2020. We've applied a certain range of multiples. You can change that range of multiples. Maybe you think it's lower, maybe you think it's higher. But do keep in mind that if you change one of these numbers, the entire calculation is going to change and your fair price per share is going to change as well. With that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye-bye.